Hello, this is Dave, and welcome to Equities Story. I'm with the wonderful Wolf, and just on a different computer in a different office this morning. But we'll get that sorted out tomorrow, where I take my stuff back out of the basement into the
from the bunker,
back into the Swiss office with a jacuzzi and a squash court and all those things that CEOs have nowadays. Anyway.
The Mercedes at the front.
Yeah, God, it's amazing. All right, Wolf, just to say, this is just general share advice, not personal advice, as per the disclaimer you can read here. Equity Story disclaimer. Right, let's get going, because Happy New Year, Wolfie.
Oh, I'm so glad 2022 is over, Dave. It's been a very difficult year. Not that 2023 looks much better at this stage, at least one part is done. Let's hope, we have a better second half of the 2023, because I think we're still going to see a little bit of volatility in the first half.
Well, I think it's still there. We did talk about this a little bit earlier, didn't we? This year is a year where the economy could tick along okay, but we're going to have possibly stagflation. And really, stagflation, explaining this, Wolf, is basically we've got inflation, which I don't think, certainly in America, is going to go away that easily. But also possibly on top of that, we're going to have an economy which is stagnating and maybe higher unemployment. And just generally speaking, it's in layman's terms, it's going to be tough out there.
Yeah.
So plenty to look forward to.
I can't wait. Another year probably of things that we never come across before, and we're gonna have to deal with it. It's gonna be fun. But this is what we're here for, Dave. I like it. I'm always excited about new stuff.
Well, precisely, because at the end of the day, there's always something that's going to trend or trade. Yep. And even last year, it was very, very tough. But what was around last year, I think we picked it absolutely beautifully. So let's get going, because Wolf, there's a lot to talk about this morning, and there's a few announcements. I know you're nervous because your MEK is in a trading halt. Doesn't look very, very good, does it?
What do you mean?
I'm joking. It's going to be. Are you excited?
Everyone a heart attack.
Are you excited or not?
Well, look, the expectations are this is going to be about this this supposed December resource update, right? Which they didn't, which they obviously probably had such a big December that and celebrating too much that they will a little bit late with it. But anyway, we'll see what happens, and then we'll reassess. Dave, every story we play with, every story we follow, we assess it on every announcement whether it's still making sense. So let's hope it's a good one.
Let's have a look at Weebit, because I know we had a great trade on this in the old days. I think it was like a nice little 300% gain very, very quickly. We don't like the story, so it was just a good trading stock in crazy times. They come out with an announcement today, which again, Wolf, when you've read through that, I actually wouldn't buy that chart. If I'm looking at the chart, I wouldn't buy it. I would have bought that, but I'm not buying that because I don't like the price action. I'd want to see better price action right now to buy it. But is there anything on that announcement?
Well, you don't like the price action. I don't like the announcement because I don't understand it. So as usual, it's like anything brain chip, Weebits, the technology that they go through there. Unfortunately, I don't know much about it. So it doesn't matter how much I read about it, it still does not sink in. So I pass. I'm over to you again with these sort of stories, whether they are trade or not.
Well, I understand the whole system completely. Being an expert in chips and chip technology, build them in the back garden. But even so, Wolf, I would just look at the charts. The charts say it's not a buy, so I'd stay well away from it.
Do you build them with huge lithium mine in your backyard?
I'm digging every weekend if I can see what I can find. You've inspired me, Wolf, with your rock sampling you do every weekend. Now, M7T.
Yes.
Back. So it's been in a strong downtrend. Hasn't quite threatened. personally myself, I would still want to see a little bit more, but a good jump today on, as you said, Wolf, I'd argue a Pro Medicus type announcement. Very, very good. Excellent.
Yeah, absolutely. I mean, there is definitely that, you could see a little bit of Pro Medicus in this, can you? I mean, the technology they've got, the software that they've obviously sell, the projection, the path trajectory, also pretty similar. So, it's early days for these guys, and they're still probably going to have a lot of quarters that are maybe not so good, and some that are going to be very, very good. So it's going to be up and down. But you got to like its story and its maybe future if they keep playing their cards right. So I agree with you. It's too early for me as well. I actually thought about this morning when I saw the announcement, thinking this is excellent. Should I be buying this on this announcement? And I'm thinking to myself, not just yet. And the reason why is I want to first of all see the quarterly, what comes through, which is obviously we're in the quarterly season right now. And second of all, I'm probably going to wait till February. So I want to see what the outlook's going to be like for the rest of the year. Because the markets at the moment have marked down all these stocks, right?
Just importantly, it's not a annual contract, is it, for 16.7 million? It's 16.7 million for over a 10-year period, correct?
Yeah, that's exactly right. So you got to take all this into account. But at the end of the day, is these stories that are unprofitable and been marked down, they are there for a reason. So it's just a little bit too early for me. I just need to see a bit more, and there'll come a time probably where we're going to start buying this, but just not yet.
Yeah, definitely. Couldn't agree more. Wolf SW1. M. Sorry, it's this new office. It's all the lights in this new office, and I can't get used to the
Doesn't matter. Look,
all these people standing outside the door, peering in, wanting to come in and talk to me. Go on.
The story is good. Story hasn't changed really. We thought this is undervalued, and I think it probably is undervalued, but the market just doesn't want to have a bar of it at the moment. And maybe the reason is the perceived, obviously we've got issues here in Australia with the growth slowing down, and the market's taking the view that if the market's going to slow down, advertisers are going to slow down, it's going to hit all these NECs, SWMs, and so on, which is understandable. I don't mind this, but there is value in this, and there will come a point in time where this will probably be higher than it is right now. But it's hard to fight against the tides, right? When the tide's going against you, it's hard to swim out there. So, if you're out of this, you would probably just stay out of this. If you're still in this, Dave, I'm going to leave it to you. But like I said, fundamentally, I'm okay with this. But what would you do if you're still in this?
Well, we did say you had this as a buy, as a long-term technical play, and I think you because the story is only trading up here 3.
Yeah, it's cheap. Look, like I said, fundamentally everything is looking okay for me. I don't mind the numbers. I don't mind the story, the growth that they've got, and maybe there might be a couple of headwinds here and there, but generally speaking, I'm okay with this longer term. So, like I said, for me, I'm interested in the story, but from a technical point of view,
it'd be nice if they paid a dividend. I mean, will that come back one day?
Yeah, absolutely. If they start making profits on a regular basis, absolutely, they will come back.
I don't know. Well, I mean,
you've
got to have a stop loss somewhere. Maybe that is if it goes under 40, right?
Yeah, fair enough. I mean, that's it. And I know, look, we've been talking about, maybe there's a nibble around the 40 cents mark, but the longer this drags on, right, that share is doing nothing, the longer it's telling you that the tide is pretty strong. So there's no rush to this. There's, you can just play with something else for the moment.
Well, Wolf, look at the price action we've got here, right?
Yep.
This bit here, it's exactly the same.
Yeah.
We just got to wait. We just got to wait till we're back above the water. Above the water.
Exactly. And maybe that's when we're coming out of this recession type periods, or maybe that we can see the issues that we've had starting to ease off, like the inflation, right?
Definitely. All right, VNT, Wolf. So again, the chart really doesn't look exciting at all. It does pay a little bit of a dividend, But you wanted
Hey,
to
we're
talk
desperate.
about...
We're clutching at straws this morning because there's not much announcements, right? So I saw this come out and as a contract win, and I thought, let's have a look at this because we haven't really looked at some of the bigger stories. Let's see where it's at. And I'm looking myself, I'm looking at the fundamentals of this. Is it something that I'd be possibly interested once it gets over the trend lines? I'm thinking to myself, no. So if you guys, whoever are thinking, oh, this is not a bad story for me, I think it's a little bit too expensive. It's trading at about 33 times. Dividend yield is okay at 4.6. But generally speaking, I think there'll be a better time to pick this up somewhere along the line. So pass for me for the moment.
All right, and obviously last thing but least, Dave's back in charge at the old equity story. So back out of the basement, they locked me down there, Wolf. And but just doing the same old thing that I was doing 3, 4, 5 years ago. So nothing's really changed from Equity Story's point of view. It's just everyone has to now bring their own toilet paper to the office. That's the old
and bow to the Hound.
And bow. I couldn't believe it. You know what? I walked today. There was no red carpet. Nothing.
Really? There's no petals of roses or anything like that?
I thought they were going to be putting like roses around me and
I know
and everything, and nothing. I just got like I got a coffee and
good.
And
Dave, I tell you what, maybe that's the clue here. They're saving costs. I like it. Most petals for you. That's a good thing for EQS. Come on.
Well, I'm the old like anyway. Say no more.
Scrooge.
We just got to just remove Glenn Rogar, put my face there. That's all we got to do.
That's it.
Sorry, Glenn, you're gone, mate. No, but that's a great video, by the way. Well worth having a look at. He's a great talker.
Can I see where he lives? Because I can go and stalk him.
Well, it's not. I don't want to talk about your new best friend. All right, let's go, Wolf. So
okay, go on. Let's
now announcements today. Obviously, there's one announcement, MEK, where we've got a lot of people in that one. We're bated breath. It hasn't come out yet, and unfortunately, it must probably eventually come out as soon as this video is over. But and then we could talk about it tomorrow. But what we are going to talk about, and there was one thing, when you get stagflation, what is generally a place that does well, which is actually, what, Wolf? It's commodities. Commodities do well in times of stagflation. So the commodities have been having a little bit of a move up and actually looking fairly good at the moment. Yeah. And I want to go through some ideas. And you see gold now is trading at 1,826 an ounce. Not too bad in Aussie dollar terms. It's most probably looking superb.
Yeah.
And there are some stories. We spoke about evolution. It's been in a downtrend. It's a story that you were paying $6.54 back in 2020. You now buy it for half that price, and it is above trend. So evolution is, for the gold bugs, is worth having a look at. As is Newcrest. It's still holding above trend, and a good quality gold company could reasonably do reasonably well. We've got iron ore. Come on, explain to me this. Iron ore. It's holding up beautifully. I
can't explain this. It must be all about China opening up again. I think that's the thing. It's potentially maybe a bit of stimulus, maybe a bit of relief type rally. I mean, I don't know what the actual facts are behind it, to be honest, because the numbers, when you see the Chinese numbers, they're not brilliant. So you wouldn't think that iron ore is going to go surging through the roof. But anyway, if you look at the iron ore chart, it looks fantastic. And that's why we're sort of trying to look at the CIAs and FMGs to see where they're at. So where are they, Dave? What would you be doing with, say, for example, a CIA? If you're trading in CIA, where are they?
We've got that target price. So we put this on, didn't we, down here? We got that target price of $8. I still think it's a good chance it's going to get there and hit it, right? And likewise, it's nothing that's not telling you to get out of the story at all, right? It's looking excellent. I think it's going to have, like you said, Wolf, I think it'll have that little bit. I think CIA will have that little bit of move and tickle under that $8, and maybe that's it for the time being. And again, FMG, you know, what you would say with FMG, if you're in it for the dividend, surely you'd be thinking, well, okay, with this iron ore price, maybe you're good for another big year of.
Yeah, maybe I can squeeze another dividend out of this.
Yeah, I mean, they're saying now they're giving 10%. Maybe you're going to hold that up, right? So, no, at the end of the day, for me, FMG, both of these CIA FMG are both a hold, definitely.
Yeah.
Which
goes hand in hand, iron ore, with actually steel, and the steel prices again are very similar chart to the iron ore prices. So BSL is the one that really is the 1 year, you know, look at in Australia. It's not trending as good as you think it would, right? With like a CAA or FMG, but you know, just put it on your watch list, and if it starts trending, it's probably the reason why, because of the steel prices going up. But you know, with BlueScope and some other companies, there's also that inflation problems that you might have. That's why maybe there's a little bit of headwinds as well. It's not just all positivity.
On a P of 3.4, is that factored in, Wolf? I don't know.
I don't know. But you know, these numbers, the 3s, the 4s, they fluctuate so much, because from one half to the next, they could go from $8 billion profit to a minus $1 billion.
Yeah, they are. They do vary a lot, don't they?
Yeah. So anyhow, it looks decent. If you just take a snapshot right now, it looks cheap. It looks decent. You'd think to yourself, they should have another good little period here where they're going to make some good money, right?
Right. And just lastly, I mean, other commodities like platinum is looking strong with CHN, and silver. So I'll try and bring the silver chart over, so we're going to have a little look at it.
Yeah.
So
yeah, it's actually looking better than gold.
Here's silver having a really nice little run. That's, you know, from going back to that 2020 prices, maybe back to that test that sort of $28 an ounce level. Wolf doesn't look too bad at all, does it? And you know, last time it did that back in 2020, I mean, it did have a little bit of a run up. This is silver mine, and possibly if it gets up there, you might see this at least have a little bit of a run up to maybe 26 or 28, Wolfie.
Yeah, I agree. So one again, put on your watch list. If it starts looking really good on the charts, you buy it for 10% gain, and you know, hopefully you're going to get out of it.
Wolf, what I would say is that if you look at these lithium plays, we called it 2-3 weeks ago. Lithium's starting to get out. Look, CXO looks worse and worse. Look at AXE, broken trend. PLS breaking trend this week. You know, all those PLS lovers, you've got to get out of that.
Yeah.
If it looks like that by the end of the week, run as hard as this is like, you know, someone's, you know, invaded your house. Just run as fast as you can, because that looks terrible. But saying that, just wait to the end of the week, right?
Yeah, exactly.
As per usual.
Dave, is lead. Can we just talk about lead, because that chart looks good as well, and you've got that G1A on there. So just put on, if you can, from Trading Economics, put in the lead chart, and that's the reason why this G1A looks pretty good, and it's actually turning into a miner now. So that could be quite interesting dynamics to see how far it can go. So I'd be looking at this one pretty closely, Dave, to be honest.
So tell me, why is lead having a little bit of a run?
And again, very good question, which I thought about this morning. I'm thinking, why is this one not very good? Copper's okay, but lead chart especially, I'm thinking, my God, it's looking great. So I'm thinking there must be something maybe about what do you call it, the LME, right? The storage, where the stockpiles could be getting pretty low. So there might be something going on there regarding that, but one to watch for sure, because this looks pretty good.
I think if you're looking at this lead chart, Wolf, definitely, I mean, yeah, it's had a good run the last few weeks. If you could get over that sort of, what is that, 2,500 level?
Yep.
Yeah, maybe it could have a little bit of a run higher.
Yeah, I mean, look at the longer chart. It's not as exciting as the short-term charts, but that's how they go, right? They go on fluctuations on a short-term basis.
Yeah. On that note, Wolfie, I'm really excited. We've got a great year ahead. Now we're live tonight.
Yes, we are. Please join us. First one of the year.
First one of the year. So we're live tonight, and Looking forward to that. All right. Thanks, Wolfie. Have a wonderful rest of the day.
Cheers.
See you, mate. Bye-bye.
Bye.